Sanctions have been imposed on 82 individuals and 29 companies. German payment provider Wirecard went bankrupt on Tuesday.
Russia has launched an unprecedented disinformation campaign against...
Billions of dollars have been found in various offshore accounts.
Welcome to Integrity Insights, the Berlin Risk Podcast. Hello everyone, you are listening to the very first Integrity Insights episode in 2026. And to make it a little festive, I invited Berlin Risk's Managing Director Jennifer Hanley-Giersch to talk about the most important developments in AML CFT for the past year. It's admittedly a very information-dense episode, but I think it's very useful for anyone working in this field, especially those who want to stay on top of their game. Before we dive into the topic, I would also like to express our gratitude to the sponsor of this episode, Beyond, a provider of flexible local workspaces that empower global human endeavor. We actually recorded this episode at Beyond Berlin, which is a great co-working space located just a stone's throw away from the Berlin Central Station. So if you're in Berlin, make sure you check out the space if you need a place to work and connect with others. All right, let's get into this conversation. Jennifer, welcome on the podcast.
Hi, Philip. It's really great to be back again.
Well, it's great to have you back. We last spoke about a year ago when we did our 2024 AML CFT regulatory roundup, and we decided to do this again for 2025. So if we dive straight into the subject, Jennifer, as there's a lot to discuss. So if you look back at 2025, what were the key topics and AML CFT risks that really stood out for you?
Yeah, very good, Philip. Well, it's clear that for everyone who's working in the anti-financial crime space that, this wasn't just a year of incremental changes, which we had in the years before, but it's really been a year of kind of fundamental shifts. So between the launch of the new EU Anti-Money Laundering Authority in the middle of 2025 and the preparation for the new EU regulation, AFC professionals, I would say, have never been busier. The EBA, the European Banking Authority, really set the tone for the year. They identified three pillars of risk that have dominated our work. First of all, the geopolitical volatility, so continuously reshaping our approach to sanctions. Second, digitalization, which is moving faster than many traditional controls can keep up with. And thirdly, we've had legislative reform. So as we align ourselves for a more unified European standard, there's a lot of adjustments to make. We've also seen increased pressure on the fintech sector, while incumbent banks continue also to be rigorously supervised. 70% of supervisors reported an increase in threats from fintech firms in 2025, specifically citing weak governance and AML CFT controls. Locally in Germany, BaFin identified significant deficiencies in some of Germany's largest fintech players, but they've also issued their largest penalty to date, a massive 45 million euros against JP Morgan. So with regard to the crypto sector, this remains a major high-risk area from the perspective of the supervisors. Even though we saw a 2.5-fold increase in authorized firms, we're still seeing persistent gaps in compliance. And in some cases, we also see deliberate attempts to bypass oversight entirely. There's also been significant movement on the topic of country risk. So after lengthy discussions, the EU and the FATF removed the UAE from the list of high-risk jurisdictions, but added Monaco. And at the end of the year, both Russia and the British Virgin Islands were also added. We're now awaiting official publication of the new list, which we expect to come into force in January. So there will be a lot of KYC files that need to be remediated as a result of that. And finally, in 2025, we saw a major refocus on counter-terrorist financing. The EU approved a union-wide strategy, and the FATF published its first comprehensive report on terrorist financing risks since 2015. Now, what's concerning is the technological adoption by these groups. They're increasingly moving towards virtual assets, online gaming, and encrypted messaging platforms for both fundraising and propaganda purposes. So like you see, Philip, in summary, the big themes that defined our year were all in all AMLA readiness, a relentless focus on data integrity, and heightened vigilance towards terrorist financing and sanctions. So I'm really looking forward to diving into these topics with you today and discussing what they mean for the road ahead.
Thank you, Jennifer, for this high-level summary. What I would like to follow up on first is the regulatory compliance in the fintech space. You mentioned yourself that there's been a lot of issues there. Why do you think the fintech and RegTech tools are often problematic from a supervisory perspective?
Yes, well, the issue companies face when they're starting out is that they're obviously under pressure to gain market share, and then they sometimes or often prioritize growth over compliance. And in addition, the EBA also came out last year saying that over half of the serious compliance failures involve improper use of RegTech tools, resulting from poor implementation and lack of expertise. So sometimes companies introduce RegTech solutions without actually knowing what these tools are doing and how they're calibrated. So even though everybody is excited about these new tools and also the opportunities that AI can bring to the compliance space, it's important that the technology is properly implemented, understood, and monitored adequately as well to avoid supervisory scrutiny.
Okay, that makes sense. Let's talk about what has been happening in the EU in terms of regulatory developments. The so-called Single Rulebook will come into force in mid-2027. What does it mean for obliged entities?
Yeah, well, just to recap on the status of the implementation of the regulation, which will come into force in July 2027, it's important to understand that already in 2026, obliged entities will need to prepare some regulatory and technical standards, so-called RTS, which are considered level 2 acts, will require financial institutions and alternative investment fund managers to take action within the next year already. In particular, there's 2 draft RTS documents that have been published by the EBA in October 2025. They're still currently under review by the AMLA in Frankfurt, and we're expecting them to be enacted in the middle of 2026. We have no final date yet, but based on these draft RTS, obliged entities have already started preparing, but still a lot of work needs to be done in 2026 to be ready for 2027.
And also national AML supervisors such as BaFin here in Germany will have to start collecting new risk data from October 2026. What kind of information will this concern?
Yeah, this is a very important point, Philip, and thanks for the question. So just to give some background, in order for the national supervisors to be able to feed AMLA's risk scoring system that will be implemented, they will have to periodically collect specific data points from obliged entities, which they will start doing already in October 2026, so in effect more than 6 months before the application of the regulation itself. These data points, which will then be used by supervisors to establish supranational and country inherent risk levels related to the risk categories that we already know: customer, products, geography, and distribution channels. For the customers category, this includes, for example, the number of legal entities with complex corporate structures, the number of customers engaging in high-risk activities, or the number of legal entities with at least one UBO located in a non-EEA country. So this means basically that obliged entities must report upon data points that they might not at this stage be collecting. But it doesn't stop there. So to enable the calculation of residual risk, obliged entities must also provide data on their AML CFT risk controls, which in Germany currently is not the case. So this data must be categorized by governance and compliance function, by internal controls and outsourcing, risk assessment, customer due diligence, monitoring, transaction monitoring, and suspicious activity reporting, targeted financial sanctions, and the group-wide AML CFT framework if that's applicable. So quite a long list there. Examples of such control data points include, for example, the number of customers for whom customer information was reviewed and updated in the last calendar year, or the number of customers whose customer data and information does not yet comply with the requirements of Article 20 of the Anti-Money Laundering Regulation. So also on that front, there's a lot of work to be done.
So, Jennifer, as you mentioned, this data is needed for AMLA so that it can feed its risk meter, and this is tied to another major development in the EU in 2025, and that is the centralization of the European AML supervision. So, how do you see AMLA changing the supervisory landscape in the years ahead?
Yeah, very, very good question. Obviously, we don't know the details until the supervision starts, but we've been talking about AMLA in the future tense for quite a number of years now. But as of March 2025, with Bruna Skeso being appointed head of AMLA, we're really officially in a status of game on. Her strategy isn't just about adding another layer of bureaucracy, she says. It's about creating a central hub that finally harmonizes AML standards across the entire European Union. So it might well be that we will have a standardized supervisory approach, at least for those entities supervised by AMLA. One of the most important takeaways from Skeso's first interview is that AMLA is casting a very wide net. While they will directly supervise banks, they're also targeting a diverse range of financial institutions. Her philosophy is clearly risk over sector. So AMLA will focus on any entity with the highest inherent and residual risk, ensuring that no sector is left behind in the effort to stop financial crime within the EU. So everyone needs to really mark their calendars for July 2028. That's when AMLA officially takes over direct oversight of 40 major financial firms that the EU considers systemically important and high risk. We don't know which firms are going to be in scope yet, but we will find out over time. What AMLA is also doing is that it's building a central hub for data sharing by connecting the national financial intelligence units. Another important point is that the crypto asset sector is still very much in focus. So while MiCA is now in effect, crypto asset service providers must be licensed in order to operate. AMLA's 2025 work program called From Vision to Action prioritizes these players, specifically because of the risks inherent in cross-border operations and also the anonymity features linked to crypto assets. So any crypto asset service providers or large fintechs can expect much stricter harmonized scrutiny going forward. So that will be one of the major changes for them. Skeso is really quite candid about the challenges of fragmented national practices. She specifically mentioned concerns about countries like Malta, where rules might have been applied less rigorously in the past to attract business. We had a recent controversy involving the rapid licensing of a firm, for example, OKX or Crypto.com, which took place in Malta, even though they were known to have unresolved compliance issues. And so what she's striving for is harmonized oversight and to make sure that licensing shopping is no longer a viable strategy. So on that point, I think 2026 will also be the year for building the IT and governance infrastructure to make that all possible.
Thank you for this overview, Jennifer. I would also like to invite all our listeners to reach to read the article that Jennifer and I wrote on this very subject for ACAMS Today last year. We will make sure to link it in the show notes. But now I would like to focus on Germany, where the local supervisor BaFin expects German obliged entities to adopt a so-called risk-first approach. Can you help us understand what they mean by this exactly?
Yes, well, this was a term that was introduced at BaFin's yearly AML CFT conference in November 2025. The executive director, Birgit Rudolphe, gave a keynote speech in which she emphasized that a successful AML CFT strategy is dependent on a rigorous risk-based approach. So she rejected decidedly a one-size-fits-all approach and stressed that the prevention measures must be tailored to the risk taken. Obliged entities, including small entities, must ensure that their safeguards match their risk profile, which requires them to really know their customers and understand their business model. But it also enables a true implementation of the risk-based approach. So similar to last year's conference, she once again continued to emphasize the importance of terrorist financing. She said that obliged entities must make sure that they do not act as conduits for terrorist financing and that they're particularly vigilant of the risk attached to associations and religious organizations that collect donations, as these can also be used to finance terrorism. Her speech also touched upon evolving geopolitical threats and sanctions, and she noted that high-risk circumvention transactions, especially those linked to Iran and Russia, were of concern. Institutions are expected to apply enhanced due diligence where elevated sanctions risks exist, and she gave the example of trade deals with countries close to sanctioned nations or the use of crypto transfers. Another important development last year on the BaFin side is that they updated their guidance, the so-called Auslegungs- und Anwendungshinweise. These came into force on the 1st of February 2025 and have started to pave the way for the arrival of the EU regulation in 2027 and the accompanying guidance, the so-called RTS. So what are the main changes in the German guidance that came into force last year? So first of all, the topic of risk assessment. So there's the expectation that a clear distinction must be made between the specific money laundering risks and terrorist financing risks. So these should be outlined separately in the risk assessment, and specific risk factors relevant, sources of information, adverse media, and a clear analysis of the current developments should be attributed individually to the money laundering risk and to the terrorist financing risk. There's an expectation that the residual risk is an important part of the risk assessment. When analysing the residual risk, the effectiveness of the control measures in terms of mitigating the inherent risk must be taken into account and clearly outlined. So understanding and mitigating the residual risk is key from a BaFin's perspective. And in addition, the risk assessment methodology must be outlined in detail. Another point are the internal safeguards. So the outsourcing of internal safeguards, including the function of the anti-money laundering officer itself, does constitute a material outsourcing as per the German Banking Act, and the obliged entities must therefore ensure that the outsourcing company has adequate resources in order to meet its regulatory obligations. And the responsibility for the appropriate implementation of the controls remains with the obliged entity. And in addition, the guidance requires that the specific roles and responsibilities of the anti-money laundering officer and the deputy money laundering reporting officer are clearly defined and set out in writing. Another point that was highlighted in the revised guidance that required additional attention is the control plan. So the money laundering reporting officers must maintain a control plan in which the scope and the responsibilities and the due dates, as well as the frequency of individual monitoring and control activities, are clearly set out in writing. And the control plan must document the appropriateness and the effectiveness of the control measures. And then finally, whistleblowing. was also introduced in the sense that the internal AML CFT reporting channel, as set out in the Money Laundering Act, can be integrated into the internal whistleblowing reporting channel as set out under the Whistleblowing Protection Act. Then we had some additional topics in the guidance focusing on customer due diligence. So data collected to identify entities should be verified on the basis of current official company filings that are no older than 3 months. The politically exposed persons list published by the European Commission does not restrict the scope of application as set out in the German Money Laundering Act, and this means that public officials of comparable rank below the national level may still be categorized as PEPs. And this is important because there's quite a lot of differences between the PEP lists across the European Union. The PEP list in Germany is much shorter than the PEP list in Italy or Spain, for example. We also wrote an article on this in ACAMS today, so maybe we can link that as well in the show notes, Philip. That might be interesting for readers. And then finally, there's a big section on the updating of customer data, which brings me back to my original point about the importance of data integrity. So the new guidance introduced shorter update cycles. The deadlines for updating customer data will be shortened when the AML regulation comes into force. And so there's a lot of work to be done on that front as well. Also in relation to beneficial ownership and the beneficial ownership register, in Germany called the Transparenzregister, it's important to note that the receipt of registration is not acceptable as proof of registration, as there's no guarantee that the details were actually entered into the transparency register. So we need an official confirmation there. And in 2025, finally, the BaFin, in preparation for the reporting that I also mentioned earlier, have moved away now from a paper-based procedure for registering money laundering reporting officers and have introduced an electronic reporting system.
Thank you very much, Jennifer, for this exhaustive summary. I would like to also talk about enforcement. So I remember that when we last discussed this subject, that the German FIU was completely inundated with suspicious transactions reports filled by obliged entities. So basically the entire infrastructure wasn't robust enough to cope with these volumes. Have they managed to made any improvements on this?
Indeed, the Financial Intelligence Unit has really made enormous progress. They actually noted a decrease in the number of suspicious activity reports in their 2024 and 2025 report. And I would say that this is the result of improved collaboration and exchange between the FIU and all its stakeholders. They've published improved guidance. They've been more clear in terms of the requirements. And therefore, instead of being inundated by a large number of unsubstantiated STRs, they've managed to increase the quality of the STRs that they've received, because even though the numbers of STRs have gone down, the number of reports that the FIU has been able to submit to investigative authorities has increased by 8%. So I deduce from that that's improved relevance of the STRs and also based on a good follow-up on behalf of the FIU. And maybe what's important in this context is that in preparation for the coming into force of the new German reporting legislation on the 1st of March 2026, BaFin also updated their orientation note in collaboration with the Financial Intelligence Unit, where they clarify the terms of what immediacy and completeness mean in terms of STR reporting. Completeness means that the reports should be well researched, they should be comprehensive and include a chronological record of investigative steps that led to the filing. And at the same time, immediacy means that they should submit a report no later than 1 day following the completion of the investigation. So the guidance basically aims to prevent defensive reporting and to increase the quality of the STRs that they receive.
Okay, let's shift gears a little and talk about the intersection of crypto and terrorist financing. The two have been mentioned a lot together throughout 2025. You already mentioned in this conversation that AMLA will likely select major EU-based crypto exchanges among the entities for direct supervision. Why do you think that cryptocurrencies are so often exploited by criminals for terrorist financing purposes?
Yeah, thanks, Philip. This is a very good topic to focus on. So maybe let me give you some statistics. I have here the FIU's yearly report, and they list the crypto sector as a significant risk area. They received 8,711 reports linked to transactions involving cryptocurrencies. The report highlighted the increasing complexity and anonymity issues posed by digital assets and decentralized financial platforms. So despite the ease of tracing crypto on public blockchains, law enforcement struggles due to, first of all, a patchwork of global regulation, the lack of standardized tools and resources to investigate these cases adequately. And this allows criminals to obscure the origins of their funds by using, for example, anonymous wallets or automated swapping services. The EBA has published guidance on reporting requirements under the Markets in Crypto Assets Regulation called MiCA. It requires that relevant checks be performed, including customer due diligence, checks on token holders that have submitted a redemption plan, and the guidance also requires that if an issuer is not subject to money laundering terrorist financing obligations, that customer due diligence must be performed by an intermediary that is not an obliged entity. So this is an important point. And if there's one thing that we've learned from the enforcement actions in 2025, it's that the anonymity of crypto is becoming a bit of a myth for criminals, which is a good thing. So we're seeing a new level of coordination between the FBI and the Department of Justice and other international agencies that should make the entire industry take notice. So there's been some very successful crackdowns across the EU, just for example, to take note of that. What we can look at, for example, is the disruption of the Hamas terrorist network in March 2025. So back in April 2023, Hamas publicly announced that they were halting crypto fundraising. Investigations, however, found that they actually continued right through to October 2024 and collected about $1.5 million in donations. And the Department of Justice and the FBI seized approximately $200,000 in crypto assets across 17 different addresses. And by tracing the funds through operational wallets and OTC brokers, authorities were actually able to see and work their way through the deception. So what's really interesting here in this particular case, and also for our listeners, is the role that some of the major platforms played in supporting law enforcement. In this case, it was Binance and Tether, and these are both firms who've faced their own regulatory problems in the past, and they were actually instrumental. So they proactively assisted law enforcement with providing address information and also supporting the seizure of funds. Then another case, for example, in November 2025, we saw a massive blow to the anonymization industry with the takedown of cryptomixer.io. So this wasn't a small operation. Since 2016, the Mixer had allegedly laundered billions in crypto by pooling and redistributing the coins to break the transaction trail. And an international team, including prosecutors in Frankfurt and Zurich, managed to seize around 25 million euros in cryptocurrency and also wiped out servers that were located in Switzerland. So this is, as I mentioned before, part of an broader infrastructure takedown strategies. So authorities aren't just going after the users, they're taking out the service providers, the mixers, the darknet markets, and the malware platforms like Quackbot and Emotet. So I think the takeaway for compliance officers here is clear, that the tools that criminals use to hide, like mixers and unhosted wallets, are now really in focus of global law enforcement authority and their investigations.
Thank you, Jennifer. I believe this is really a key development. And another important topic that we have to mention here is sanctions and sanctions circumvention. What would you like to highlight there for 2025?
Yeah, very good. This is obviously a really important point that, like you said, we have to discuss. So let me maybe start with Iran. In September 2025, the Council of EU reimposed a comprehensive set of restrictive measures on Iran. The move followed the activation of the UN snapback mechanism due to Iran's non-compliance with the Joint Comprehensive Plan of Action, the so-called JCPOA. The sanctions reinstate trade restrictions on a wide range of goods and technologies, precious metals and financial services. And they've also reintroduced targeted financial sanctions against more than 200 designated individuals and entities. And what's really fascinating and concerning for regulators, of course, is how these sanctions are being bypassed. So BaFin has really sounded the alarm clock on the increase in Iran-linked circumvention models. They identify two main methods that all listeners in the financial sector should be watching out for. The first is the exchange trading house model. This involves diverting cross-border payments through intermediaries in the Gulf, particularly in Dubai. These intermediaries act as payment agents, essentially scrubbing the Iranian origin from the transaction before it's received by EU institutions. And then we also have the unlicensed third-party route. So we're seeing a rise in unlicensed companies based in countries like Hong Kong, China, Turkey, but also Switzerland. And they act as payment processors. So their entire purpose is to handle the transaction that would otherwise be blocked by the SWIFT system or stopped through other bank-level sanctions prevention measures. One case in Germany that we had in September 2025 was a fine issued against Warengold Bank of 3.8 million euros, where the bank was found to have had serious deficiencies in managing transactions related to Iran. And the BaFin had actually prohibited Warengold Bank from executing transactions with payment agents and third parties linked to high-risk Iranian flows, but the bank had actually failed to comply.
This is actually really interesting, and both of these sanctions circumvention models is something that we have been looking at internally, and I think we may actually do a podcast on this later this year. But I also wanted to ask you about Russia. Have there been any important developments on that front?
Yeah, very good, Philip. And just coming back to your point before, I think the whole topic of sanctions circumvention is very much in focus and has been part of the 4 sanctions packages issued against Iran in 2025, where the European Commission has put a dedicated focus on closing loopholes, but also curtailing sanctions circumvention. So let's look at the topic of physical movements of goods. So the EU is now directly targeting the shadow fleet in Russia, and they've basically sanctioned 153 vessels in total, and that are now completely banned from EU ports and engaging maritime services. But it's not just the ships. The net has widened to include third country airlines that are now banned from the EU airspace if they operate domestic flights within Russia or supply aviation goods. We've seen a full transaction ban on critical Russian air hubs, including airports in Moscow and some seaports. And Russian ownership of EU road transport companies is now strictly capped at 25%. Probably the most striking example of how granular this has all become is the ban of video game controllers. It sounds like a kind of a minor topic until you realize that video game controllers are being repurposed by the Russian army to pilot drones. So it just underlines that a dual use challenge that compliance officers face on a day-to-day basis, where it's not just about weapons, but it's about everyday tech that can be weaponized. On the financial front, the EU has now banned 13 smaller banks from using specialized messaging services. The 19th package, which is the last one that was issued, prohibits EU operators from providing crypto services to Russia and aiming at the A7, A5 ruble-backed stablecoin and various other exchanges because crypto is being used for sanction circumvention purposes, as I mentioned before. And there's also a ban on engaging with Russian payment systems like MER or SBP. What the 19th package also prohibits is the import of Russian liquefied natural gas into the EU, and there's more stringent limitations on major Russian energy companies also. What's also noteworthy is that the EU has introduced travel restriction on Russian diplomats and limited the services they can provide to the Russian government. And finally, another interesting point is that an additional 8 media outlets have been suspended in the EU for justifying the war. I'd also like to talk about a fine issued by OFAC, the largest penalty of 2025, and that was against a company called GVA Capital, so a San Francisco-based venture capital firm, and they were fined almost $216 million for willfully violating Russian sanctions. And I think this is an important one. They knowingly continued to manage $20 million investment for a sanctioned Russian oligarch long after he had been added to the SDN list. The firm attempted to hide the relationship by coordinating through the sanctioned individual's nephew, whom they treated as a proxy to bypass the direct scrutiny. And even after they received legal advice in 2018 warning them that any transfer of shares would violate sanctions, they still moved ahead with the transactions. And then, to make matters worse, the firm failed to fully comply with an OFAC subpoena, which led to a discovery of thousands of documents only after the penalty notice had been issued. So basically this case proves that relying on formalistic ownership structures or proxy relationships will not shield obliged entities from being fined if they have actual knowledge of sanctioned parties' interest.
I think this is also interesting because I've certainly heard this opinion that some people are under the impression that the current administration in the US is perhaps not so big on actually enforcing sanctions, and this case demonstrates that in fact the opposite is true. One last question, Jennifer. If you go beyond pure AML, another major topic is cybercrime, ransomware attacks, etc. Anything you would like to highlight on this for 2025?
Yeah, this is a really a good one, I think, to end on, Philip. Even though it's not strictly speaking financial crime, it absolutely impacts what financial crime professionals are doing and touches upon a lot of the topics we discussed here already. So I think if you want to understand the scale of the threat that we're facing, it's good to take a look at the Bitkom study that was published late last year. They claim that cyber attacks cost German companies almost 300 billion euros last year alone, so an increase on 8% from the previous year. They state that 9 out of 10 companies have been affected in some way. And the question we're asking ourselves is, like, where is this all coming from? And I think one interesting point is that obviously organized crime accounts for a large percentage. They say 68% of the attacks. But what we're also seeing is a rise in activity linked to foreign intelligence services, especially from Russia and China. The weapon of choice is still ransomware. 34% of companies were subject to ransomware attacks. So it wasn't just a data breach, but really kind of also threatening the continuation of the business operations. So in response to that, businesses have pushed their security budgets up to 18%. Some experts say that's not enough. It should be 20% of the total budget in order to stay ahead of the curve. But I think a lot is happening there. Regulators are also stepping up to help. The BSI in Germany published technical guidance that is, I think, of great support. It's a good resource for fintechs or banks who are looking to patch up the holes in their system. It's very much focused on a security by design approach. And it also kind of provides a concrete testing criteria for the development of apps and mobile applications, so to improve the security as you walk your way through the development. And maybe another interesting point on that is the DORA, the EU regulation to improve the resilience of technology across the EU. And the European supervisory authorities, they published their first official list of critical ICT third-party providers, and this is obviously also a game changer. So finally, the regulators have identified the tech companies that the entire financial system relies on, and cloud providers and data services that are too big to fail have been put under this framework, and so they will be directly supervised by the European supervisory authorities to ensure that a failure of a single tech provider doesn't trigger a systemic collapse on the banking sector and other sectors as well, of course. So I think, cybersecurity in 2026 is now a core component of financial stability. And so whether you're a small startup or a large company, I think resilience is really the only word that matters in this context, and something to very much focus on.
On that note, Jennifer, I would like to thank you so much for agreeing to sit down with me and going over all of this. I know it's not a small feat, so I really appreciate that you took the time, and I look forward to hopefully doing this again next year.
Thank you very much, Philip. It's been great to have this conversation with you, and look forward to seeing you soon.